In this video, we need to discuss Shopify's Q1 2022 earnings and conference call that just came out this morning, and there is a lot to unpack. So far, Shopify stock is down about 13% on the trading day, which is trending up a bit from earlier this morning when it was down about 17%. However, we can see the Nasdaq index is down over 5% today too, along with other huge stocks like Tesla being down over 8% too for absolutely no reason at all. So all things considered, I don't believe Shopify investors thought the earnings were that bad at all, and I believe there was a bit of an overreaction to the downside earlier this morning. Anyways, buckle up your seatbelts, ladies and gentlemen. Let's get straight into this video right after you destroy that like button for the YouTube algorithm and subscribe to my channel if you have not already. All right, now getting straight into Shopify's Q1 2022 earnings, the first thing we can see here is that they just announced plans to acquire the e-commerce fulfillment technology provider Deliverr. They say addition of Deliverr seeks to expand fast and easy fulfillment for independent brands across channels. And basically, Deliverr is going to enable Shopify to build out their fulfillment network and offer 2-day free shipping for many of their channels that they sell on. For example, after Deliverr is fully acquired by Shopify, many Shopify merchants will be able to get 2-day free shipping on many of their channels that they sell on, such as Facebook, the Shop app, Walmart Marketplace, on Google, eBay, and even Instagram. As a Shopify shareholder, I am extremely happy to see this acquisition for a few reasons. First of all, Deliverr is an asset-light and technology-heavy platform where they already fulfill over 1 million orders per month. And secondly, this acquisition is now going to allow Shopify to compete much better with Amazon, now offering free next day shipping and free 2-day shipping on certain channels. Anyways, we'll talk a little bit more about this Deliverr acquisition later, but for now, let's get straight into Shopify's earnings. Starting off with the Q1 financial highlights, we can see total revenue in the first quarter grew 22% to $1.2 billion, which represents a 2-year compound annual growth rate of 60%. Now, this revenue growth rate did decelerate significantly from Q4 of 2021, which was at about 41% revenue growth year over year. But we do have to remember that back in Q1 of 2021, this was their best quarter ever, where they actually saw 110% revenue growth. So the fact that Shopify was still able to grow above 20% growth on the top line year over year, despite having these insane comps year over year, I think this is pretty impressive. And they did also reiterate in their guidance that Q1 will be the slowest revenue growth, whereas Q4 will be the highest in the year as we get through these difficult comps. Yeah, and as we can see here, the first quarter of 2021 marked the highest revenue growth in the company's history as a public company, driven by stimulus and COVID-19 lockdowns. Moving along, we can see monthly recurring revenue increased 17% year over year, up from $89.9 million to $105.2 million this past quarter. And I do want to show Shopify Plus contributed $31.8 million or 30% of MRR, compared with 26% of MRR in March 31st, 2021. So basically, if you weren't aware, Shopify Plus is the platform Shopify offers for their larger enterprise clients. So this just means that much larger brands and larger enterprises are moving onto the Shopify platform, and they're occupying a much larger portion of their recurring revenue, which I believe is much more stable than having more small businesses. They go on to say subscription solutions revenue was $344.8 million, up 8% year over year, primarily due to more merchants joining the platform and reflecting our change in terms to make selling in our app and theme stores free for partners up to their first $1 million annually. So I will admit this is quite lackluster growth when it comes to subscription solutions revenue, but I believe that Shopify was making a 15% revenue share based on the first $1 million from each merchant that sells apps on the App Store. And the fact that Shopify has thousands of app developers on the App Store, this is going to be a significant portion of revenue that they're now missing out on, but it is for the benefit of the company long term, since more app developers will choose to go on the Shopify platform to make more money. This change was enacted in Q3 2021, so we won't start to see better subscription solutions growth until about Q3 of 2022. Gross merchandise volume for the first quarter was $43.2 billion, which represents a 2-year compound annual growth rate of 57% and an increase of $5.9 billion or 16% over the first quarter of 2021. So again, pretty lackluster growth when it comes to the 16%, but we do have to remember that last year they did have 114% year-on-year GMV growth, so that is something to remember. And I'm sure that once Shopify moves past all of these comps and into 2023, they will start seeing revenue growth re-accelerating. Their adjusted gross profit dollars grew 14% to $646.1 million in the first quarter of 2022, compared with $565.1 million for the first quarter of 2021. So as they did state in their guidance last quarter, their gross profit dollars growth will trail their revenue growth in the short term, as they are investing a lot more into their fulfillment network work and just having lower margin merchant solutions revenue versus their subscription solutions revenue. Adjusted operating income for the first quarter of 2022 was $31.9 million or 3% of revenue, compared with adjusted operating income of 21% of revenue or $210 million in the first quarter of 2021. So technically they were still profitable. But guys, I do just want to emphasize the whole point of investing in Shopify right now is not to invest for their profitability. It's for their growth and their top line growth specifically. Revenue growth is the number one factor that I care about in this business right now. So as long as they can continue re-accelerating their revenue growth from this 22% that we just saw in this quarter, I will be very happy. They did post a net loss for the first quarter of $1.5 billion or $11.70 per diluted share. And just like with Amazon and the Rivian investment, they did see some unrealized losses on certain investments, so that's why they had such a huge loss. However, after backing out all of those unrealized losses, they did have adjusted net income for the first quarter of $25 million or 20 cents per diluted share, which is basically nothing, but it's good to see that they are still profitable. Then we can see as of quarter end, Shopify had $7.25 billion in cash and cash equivalents and marketable securities, compared with $7.77 billion as of December 31st, 2021. So hasn't changed too much, only down about $500 million. All right, now let's take a look at their investor presentation for Q1 because things have changed quite a lot in terms of the formatting and also the things that Shopify likes to highlight. So in terms of the quarterly highlights, POS or point of sale GMV was up nearly 80% year over year. So even though Shopify is seeing a slowdown in the e-commerce side of their business, they are also benefiting from their point of sales. So they do have like very good hardware that they sell physical retail businesses that are able to then use that point of sale software in their physical businesses. Online commerce and point of sales GMV growth year over year outpaced respective markets in the US. So that is exactly what they predicted in their past outlook. Share of social and search channel GMV as of Q1 2022 has gained more than any other channel since Q1 2020. So that just means the gross merchandise volume that they're generating off of Facebook, Instagram, TikTok, and even Google search are generating more GMV than any other channel. In terms of building trust with their merchants, they say Shopify Payments gross payments volume penetration increased to 51% versus 46% in Q1 2021. So that means a lot more merchants on the Shopify platform are starting to use their payment services and many other types of services. Shopify Capital revenue outpaced total revenue growth. Shopify Markets features used by tens of thousands of merchants after rolling out to all merchants in February 2022. All right, now moving into the financial highlights here, I have already talked about a lot of these points, but we will discuss what are the positives and negatives. And I do just want to point out, I believe Shopify copied Tesla on this. I mean, look at the similarities between these two slides. This is in Tesla's Q1 2022 update for revenue, profitability, and cash. In their financial summary, they denote what affected their revenue and profitability with pluses and minuses. And back to Shopify's slide here, they've basically done the exact same thing, and it's a totally different format from their previous earnings reports. So I thought that was kind of interesting how Tesla is influencing Shopify in this way. Anyways, revenue growth was positively affected by strong adoption of Shopify Payments, Shopify Capital, and Markets to help drive year-over-year merchant solutions revenue growth to 29%. However, as we discussed, the change in app theme store partners terms was a negative. And then there were also some macro impacts like the absence of stimulus payments, increased mobility around high inflation, and strong labor markets. And basically these negatives also affected the GMV growth as well and the MRR. Here we can see e-commerce growth is normalizing as a percentage of retail sales. So basically as COVID hit, there was a huge spike in e-commerce sales going up to nearly 16%. But ever since, that has been declining back towards the trend line, and I would expect this to spike upwards again and continue in the trend that it has been seeing over the past 10 years. And here they show how Shopify's GMV growth was supercharged over the past 2 years. So basically in the 3 prior years of business, they had a 53% compounded annual growth rate. But then after COVID hit, basically they saw a huge 57% compounded annual growth rate that would actually be much slower than 53%. But yeah, it just re-accelerated like crazy ever since the COVID lockdowns, the rounds of stimulus checks, etc. Then as the COVID mandates ease, there is a shift from consumers spending money on products to services like spending on travel. So that is why we're seeing that deceleration in GMV and revenue growth, but I'm sure this will continue growing over time. In this part of the presentation, they highlight some of their key investment themes moving forward. So in terms of Shop, which is an app that can be downloaded and kind of a marketplace like Amazon where people can buy a bunch of things from Shopify merchants, they said more users signed up to our digital shopping companion Shop in Q1 2022. Data shows Shop users spent 17% 50% more than non-users on average within 12 months of the first purchase of that merchant, making them higher value customers for merchants on Shop. For Shop Pay, they say Q1 2022 cumulative GMV reached $50 billion for our Shop Pay. Expanded Shop Pay to buy on Google for Shopify merchants. Now for Shop Pay installments, they say they continued to gain share of buy now, pay later volume on Shopify in the US quarter over quarter. Number of repeat buyers continued to climb quarter over quarter. Finally, in terms of the channels that Shopify merchants can sell on, they say they added thousands more point of sale pro retail locations quarter over quarter in Q1 2022. Strong growth year over year in Q1 2022 GMV through integrations we build includes social and search channels. In-app commerce via Facebook and Instagram is gaining traction, up greater than 4x year over year in Q1 2022. Then they launched Link Pop, a customizable link in bio tool ideal for creators, probably to put in your bio on Instagram or on Facebook. Then when it comes to going global, Shopify says internationally they introduced Shopify point of sale hardware. Then when it comes to internationally, Shopify introduced their point of sale hardware with integrated payments to 3 new markets, Belgium, Denmark, and Spain, now available in 11 markets. So here I just see the opportunity where Shopify can just keep continuing to expand into many new countries in the world, and this will just continue propelling their revenue growth. Then they completed the rollout of Shopify Markets, making cross-border commerce easier, and there are now tens of thousands of merchants using Shopify Markets features, for example, foreign exchange, currency conversion, adding a new geographic market, localizing to a market. Finally, some of the last few highlights, they had nearly $350 million in loans funded by Shopify Capital, up 12% year over year. They launched Shopify shipping to merchants in France. Over 100,000 Shopify balance accounts opened since product made generally available in January of 2022. That is insane adoption of Shopify Balance. Within only about 5 months, they have over 100,000 balance accounts open. Finally, the best part of all, when it comes to Shopify Plus, they had the strongest number of deals ever closed in a single month in March 2022. Share of Shopify Plus merchants outside of North America expanded within our Plus merchant base quarter over quarter and year over year. Finally, notable brands that launched in Q1 2022 include Joe's Stone Crab, Havanias, Mexico, Crayola, Fiera Cosmetics, Bridgestone Cycle, TRX Training, Figma, Call of Duty, Mr. Beast, and the NBA. And I just want to highlight the fact that Mr. Beast is a Shopify merchant now. He is a huge promoter of Shopify, absolutely loves it, and now this is great to see, so maybe many other creators will follow in his lead and start a Shopify store. All right, I just had to take a quick break and go get a haircut, but now I am back and let's talk about simplifying fulfillment. A few more points about the acquisition of Deliverr. This is a $2.1 billion deal, and it should be closing in the next few months once it does close that regulatory review. Obviously, this deal strengthens Shopify Fulfillment Network with Deliverr software, talent, data, and scale. Deliverr ships over 1 million orders per month for thousands of merchants across the US. It enhances Shopify's capacity to manage merchants' inventory from port to porch and across all their sales channels, including Walmart, eBay, Etsy, and Amazon, and social channels like Facebook, Instagram, and TikTok. Finally, it reinforces Shopify Fulfillment Network benefits, including simplified inventory management across multiple channels, demand-driven inventory placement, and faster delivery. Then outside of this acquisition, if we're just talking about Shopify Fulfillment Network, they introduced the following features. Proprietary warehouse management system now running in key warehouse locations. Shop Promise is a new badge in early access that lets merchants display expected delivery dates, 1 to 2 day delivery promises. Improved inbound transfer experience, easier inventory tracking across our fulfillment centers, and the ability to add new products directly in the merchant-facing app. Here's a little diagram of how Shopify Fulfillment Network and Deliverr will work together as an end-to-end logistics platform. And here they did introduce the new badge called Shop Promise, which basically promises a certain delivery date, and usually it's 2-day free shipping on orders on Facebook, Instagram, TikTok, etc. Finally, Shopify took another idea out of Tesla's shareholder deck, where they're now showing some images of their fulfillment network. So here we can see just one of the fulfillment centers, another image here scanning the packages, another one here just highlighting the automation. Here we can see a few robots carrying these packages, and just the scale of their operations here, pretty massive. Finally, guys, the last thing I wanted to do is show you how much revenue Shopify has produced over the trailing 12 months, and that comes to $4.8 billion. And now, as we can see, Shopify's market cap in US dollars comes out to $52 billion, so that is sliced into like a quarter of what it used to be. So if we take $52 billion and divide it by their trailing revenue, that would give us a trailing price to sales ratio of 10.8 right now, now, which is the cheapest that it's been over the past 6 years, I believe. So there's no denying that the stock is going to rebound from these levels. It's just a matter of when, and when the market gets better, I would assume that's when it's going to happen. Because once their revenue growth rate re-accelerates back up to 30% plus, there's no way that this stock is going to trade at this 10 price to sales ratio, because I think it's incredibly undervalued at this price. Anyways, when it comes to my overall thoughts about Shopify, there's no question that this stock has been taking a beating, and it continues taking a beating. And that's because investors just don't believe in the future of Shopify at this point. They just see so many better opportunities in the market. But guys, we have to remember what Shopify has built here. They've built a world-class e-commerce solution that so many businesses rely on every single day. And even on the conference call, the management of the company said focus on the long term. It's like the share price is obviously going to fluctuate up and down, but over the long term, I have no doubts in my mind that this will be worth a lot more. It just might take a little bit of time, maybe a year or two, but think of this as a great buying opportunity because it's not too often that we see an amazing growth stock like this trading so low from its highs. And I am very certain this company will once again be trading well above $1,000 per share. It just might take a few years. But anyways, if you did enjoy this video, don't forget to drop a like, and if you haven't already, please consider subscribing. And guys, also let me know down below what you thought about this earnings report and the acquisition of Deliver. I would love to hear it. But with that being said, I will see you guys in the next one.